Hi, I'm Jimmy. In this video, we're looking at how the stock market has performed through the years since the Great Depression. We're going to focus on who was the president and how the stock market did through each of their presidential terms. Now, I got this idea when somebody commented on our Invest Now or Wait for a Stock Market Crash video. Well, they commented, we don't have to worry about the stock market going up or down this year. We know it's going up because this year is an election year. And I began to wonder, is that true? Does the stock market actually perform better during election years? And then once I dug into that, well, I thought, now I'm curious how the stock market performed during each of the different presidencies since the Great Depression. Okay, enough rambling, let's jump right in. So the year is 1928, and the then Republican president, Calvin Coolidge, had recently announced that he would not be seeking a second term. This is the roaring 20s, and the country was growing fast, and it elected another Republican in Herbert Hoover. During that election year, 1928, the S&P 500 was up almost 38%. Of all the election years since then, Herbert Hoover's 38% was the very best election year performance. But sadly, as we all know, the fun was about to end as the US was entering the Great Depression. By the end of Hoover's presidency, just 4 years later, the stock market was down about 77% when he left office in early 1933. Although in 1932, Herbert Hoover did in fact run for re-election, but he lost to the Democratic candidate Franklin Roosevelt. During the 1932 election year, the anticipation of a new president didn't help the stock market much, as it posted about a 15% loss during the 1932 calendar year. Well, now FDR takes the reins, and the stock market, coming off the near bottom from the Great Depression, begins to rally. And during FDR's first term as president, from the day he took office on March 4th, 1933 to March of 1937, the S&P 500 posted a gain of about 229%. This was the best performance for the first term of any president since then. And clearly, this includes the 1936 election year, where the S&P 500 posted a positive gain of about 34%. And the FDR had beaten the Republican candidate, Alfred Landon, 523 to 8 as far as electoral votes go. Clearly, this was a landslide of a victory. But Roosevelt's second term wouldn't be nearly as fortunate. His second term ran from March of 1937 to March of 1941. And although the US was still neutral on World War II, the impact of the war could be felt economically, as they saw a total return in the stock market of about negative 33% during those 4 years. And during the 1940 election year, the S&P 500 saw a negative return of about 9.5% as the world was being driven into war. And this was also the first time that any president had been elected to 3 presidential terms. At the end of 1941, the US entered the war, and Roosevelt's third presidential term ran to almost the end of World War II. His third term saw a total return of about 73%. And part of that return came during the 1944 election year, where they saw a total return of almost 20%. And once again, America went ahead and re-elected Franklin Roosevelt to a 4th term. His 4th term began on January 20th, 1945. But due to a stroke, FDR's 4th term would be cut short due to Roosevelt's death just a few months later on April 12th, 1945, just 7 months before the war would end. Harry Truman would then step in as president, and in 1948, Truman was re-elected as the stock market posted a 5% gain during that election year. Then, during Truman's presidency, the stock market posted a total return of about 210%. Now that's from when he took over for FDR to the end of his one and only term, which officially ended on January 20th in 1953. That was after the 1952 election, which brought in the first Republican victory since 1928, when Dwight D. Eisenhower won the presidency, and the stock market enjoyed an 18% gain during that election year. Eisenhower was a general during World War II and had become very popular with the American people. His first term was successful as far as the stock market is concerned, posting a gain of about 105%. His second term started on January 20th of 1957, after winning the 1956 election. In 56, the election year saw a total return of about 6.5%, while Eisenhower's second term posted a total return of about 55%. Eisenhower's second term ended officially in early 1961 after the Democrat named John F. Kennedy beat Richard Nixon in the 1960 election. I also think it's worth pointing out that Dwight Eisenhower didn't have the option to run for a third term since two-term limits were put into law in February of 1951. So, Franklin Roosevelt will likely hold the record for most presidential terms. Okay, back to the 1960 election, where the stock market posted a meager 1.5% during that election year. And as I'm sure we all know, JFK was assassinated just 35 months after his inauguration. During that time, during his presidency, the stock market had posted a total return of about 27%. At that point, Lyndon B. Johnson took over as the 36th president of the United States, and then he won re-election in the 1964 election. The 1964 election year saw a 16% move higher in the stock market. By the end of Johnson's presidency, on January 20th of 1969, the stock market had moved higher by slightly more than 72%, despite the continuing escalation in the Vietnam War. Lyndon Johnson was replaced in the White House by Republican Richard Nixon. The 1968 election saw an 11% gain in the stock market. And as we know, Nixon was involved in Watergate, which led to his looming impeachment. But before things could all go downhill for him, Nixon resigned from office on August 9th, 1974. During Nixon's entire presidency, the S&P 500 had lost about 4.3%. But things got a bit better for his replacement, Gerald Ford, as the stock market rose about 41% during his presidency, despite the fact that he lost re-election to Democrat Jimmy Carter in the 1976 election, where the stock market had posted an almost 24% return during the 1976 election year. Jimmy Carter's presidency continued the streak for the stock market, as the S&P 500 posted a gain of about 57% during his one term as president. Carter was followed up with two-term Republican president Ronald Reagan. Ronald Reagan's 1980 election year saw a strong 32.5% gain. And then, once he took office in January of 1981, the S&P 500 saw a total return during his first term of about 59%, and another 93% in his second term. And in the middle of all of that was the 1984 election year, which provided a 6% return for the Republican president who won re-election. And in the following election, the country elected another Republican in George Bush. During the 1988 election year, the S&P 500 posted a total return of almost 17%. During George Bush's presidency, he saw a total return for the stock market of about 72%. Yet, despite this decent run in the stock market and the more than 7% return during the 1992 election year, George Bush lost the election to the Democratic candidate Bill Clinton. Bill Clinton's first term in office was strong, with the stock market moving more than 98% higher. This included the almost 23% return in the 1996 election year, as technology stocks were rapidly listing in the stock market. Clinton's second presidential term piled up the gains, as his entire second term saw a total return of about 83%, as the technology bubble was beginning to peak out. And this includes the 9% decline that happened in the election year of 2000, when the Republican George W. Bush won the election and the tech bubble was about to pop. Bush's first term as president was doomed from the start, as the tech bubble collapsed and the S&P 500 showed a total return of negative 6.6%. And then in Bush's second term, well, he didn't fare much better, as the bottom of the tech bubble led right into the Great Recession, and it gave Bush an almost 26% loss for his second term in office. This return was greatly impacted by the negative 37% return that occurred during the 2008 election year, where Democrat Barack Obama won his first term as president. The stock market began to turn itself around, as Barack Obama's first term posted a total return of about 101%. This return included the almost 16% return that happened during the 2012 election year, as Obama won his second term. The second term proved to continue the rally, as the stock market rallied another 66%, and almost 12% of that occurred during the 2016 election year, when Republican Donald Trump was elected. And since Trump took office, the stock market has once again continued to rally, posting a total return of more than 58%. So now we have to ask ourselves, it being a presidential year, does this add any certainty to it being a positive return for the stock market? Well, I'm not sure it does. Obama was elected in a down year for the stock market. So was George W. Bush, and Franklin Roosevelt won 2 of his 4 elections in years where the stock market was down. Now, that being said, there's still 83% of election years since the Great Depression have seen positive returns from the stock market. So that's pretty good. Now, if you're curious, the idea for this video came from our invest now or wait for a stock market crash video, where we try to analyze the overall economy and see if we can gauge how healthy the economy is right now. If you're curious, that could be a good next video for you to watch. There's a link right here. There's a link in the description below. And I really want to thank you for sticking with me all the way into the video. I really appreciate it. I hope you found this interesting. Thanks, and I'll see you in the next video.